Lyrical stylings of the B-52s there at Light FM. Good morning and hello. We're at 8:43 now, 17 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It is time double check and see what's going on in the markets this morning. What's going on with your money? On the line with us, Philip Statler from Statler Financial Services in downtown Sebring. And Philip, we had another relative party day yesterday on the major indexes. I'm not really optimistic it's going to continue today. How about you?
Yeah, I'm not either, Dave. We just can't get 2 days back to back. It seems to be this week. If my memory kind of serves me right, Monday was a good day. Tuesday was not such a good day. And Wednesday was a good day. And today's not looking so good, Dave. I just ups and downs.
You almost pick it up like a pattern. Just to set the table for the morning, it was a good day yesterday for the major indexes. Dow was up by 0.2%. That's 306 points. Standard & Poor's up by 35. NASDAQ up by 168. And the Russell 2000 was the biggest percentage gainer of the bunch. It was up 1.23%. That's an absolutely undebatably good day on the major indexes. Like you said, if we could do it 2 or 3 days in a row, we'd actually be happy and optimistic. But my fear and greed index is showing the amateur investors still in extreme fear. And I'm kind of looking at it as saying, well, I guess the trigger this morning is the fact that oil bumped back up over $94 a barrel. We kind of liked it down around 87, didn't we?
Yeah, we did, Dave. The other thing now, I put this up today too, the VIX. Haven't looked at it much lately. I know it's been up a little, down a little, but yesterday we closed in the green substantially in good positive territory. The VIX yesterday, Dave, up 7.8%.
Yep.
Big number.
Now for anybody's guesstimate that's never heard of the VIX is the volatility index. And we've been hovering in like the 14 range now for a long time. We're now up at 20. Well, my delayed quote this morning has it at 27.27. There have been days this week and basically for the last month since we started dropping bombs in Iran, the only people that made any money were the people that have put money on the VIX, right?
Yeah, but it's been volatile too. But yeah, it's been definitely gaining ground at this point because of all the uncertainty.
Absolutely. 27.2. We're not exactly up to where we were after Liberation Day or during the 08-09 crisis or any of the other hiccups that we've had. But still, when the VIX gets up above 27, you kind of sit back and go, oh, boy, this is not a day for day traders. And I suspect a few day traders are losing their shirts just about every day. We ended up with the good report this morning from the government, first-time unemployment claims. Only 210,000 people again. It always fits when I say only 210,000 people looking for work. Got to always remind folks that the normal sifting and winnowing process is about 250,000 people at any given time in a normal functioning economy. So we're pretty much drawing the stable picture of nobody's leaving their jobs voluntarily and nobody's hiring either, right?
Well, that's right. And, one of the things I talk about, I think it's on my radio show this next weekend, is stagflation. And, one of the key pillars for stagflation is high unemployment. And we just don't have that. We've got the inflation. We've got a couple other of the points, but we don't have high unemployment right now. Matter of fact, it's relatively low historically.
Then I'm glad you said historically, because we kind of got spoiled by really, really low unemployment rates. But in the context of history, I remember during the 70s that the goal was full employment was 4%, and so we're at 4.4. Little high, but not out of the range of normal wobble even. But we kind of got spoiled with the notion of it being such a seller's market for employment for so long that we kind of got spoiled in that 3% number for a while, didn't we?
We did, Dave. And so we have to remember that we're still in decent shape when it comes to unemployment numbers right now.
Yeah, it really is an incredibly resilient employment market at the moment, even with all the kicks in the privates that it's taken over the last few months. Mostly into tidbits this morning. The Iran war and the price of oil is obviously the driving factor for the macro figures on the markets all the way through. But internal stuff and the normal winnowing of the government, the TSA. Their boss says that nearly 500 TSA officers have already quit. It's now been more than a month since they've gotten paid, and few of them are just saying, oh, to heck with it, and going out and finding another job. Even when we do fix this problem with the partial government shutdown, I think we're still looking at pretty long lines to the airport. Don't you agree?
At this point, it's looking that way, Dave, unfortunately, and that falls on everybody in Washington, D.C. They need to get this thing fixed, and they've got to come to some middle ground and get this done, because you got holidays coming up. I mean, now it's already bad because of spring breaks, but you got Easter coming up, and so it's not going to be a fun time to travel.
Our owner was in town the other day and flew out of Orlando yesterday afternoon, doing his math as he goes up there. I get there 2 hours before my flight. That should be enough time. And I kind of looked at him and said, might want to count on 3. There's a lot of tourist traffic up there. You might spend 3 hours in line.
Yeah.
I didn't hear whether he got out of town safely or not, but he ain't here, so I guess he got his plane. He got his plane. Hey, another tidbit. I've got one of these chart geeks put out a thing about the productivity rate. We always hope that it goes up just a little bit. One would think with artificial intelligence getting so common in businesses, and we talk about layoffs because they're going to replace people with computers, that our productivity would go up. Well, they charted the nation's productivity rate dating all the way back to when personal computers really ended up taking a big hold on the business world. It jumped up considerably in the latter part of the 20-teens. We haven't really seen a big productivity increase with the advent of AI. I mean, it's been just this little gradual, almost flat line for the last better part of a year now. That kind of surprised me. I fully expected, with all the scares about artificial intelligence taking over our jobs, that we'd probably end up seeing an increase in productivity, at least as the only good news element of it in business.
Well, when it comes to AI, here's the deal. I mean, at least what I'm learning is that there's a big learning curve. I mean, you got to spend time and energy to figure out how to use it within your business. These big companies that are high-tech companies, well, they got an advantage because that's their business is tech, and so they're able to come in and they get some productivity gains. But the rank and file business, it's not that easy to. I mean, yeah, we're getting little tweaks here and there, but it's not a huge productivity boost in any sense of the thing.
That's a wise observation. I guess I was expecting something more measurable with the thing going on, but basically we're looking at our usual incremental 0.1% increase in worker productivity. We aren't saving any labor yet, and I'll emphasize yet, with artificial intelligence. Other stuff going on, tidbits and reports that we got. I know we don't have any household names, but a good indicator of how business is doing is how much furniture they're buying. And I know you've got one of those major suppliers on the report list this morning.
We do. One of the furniture companies called Miller Knoll. They've been around a long time. And I found this interesting because the two reports I have today, they don't really measure. They're not really looking at quarter over quarter or earnings versus this quarter. They're looking at year over year numbers, which is something I thought they should be doing a long time ago. But Miller Knoll earned 43 cents a share. However, that's a 2% decline year over year. So profit dropped, revenue increased, and they did come out and say, look, this quarter, fourth quarter, is going to be really tough with the Middle East conflict. They expect minimal shipments to go out to other parts of the country, other parts of the world. They're down almost 20% this morning.
Wowzer! Yeah, I suppose when you're shipping heavy stuff around, price of energy really does screw up a lot of your margins, doesn't it?
It does. And then the other one I have is a steel processor. It didn't mean much to me, but Worthington Steel, big steel company, they also missed on earnings. They came out like 27 cents versus 35 cents expected it, or what was expected from a year ago. So again, they're down significantly year over year. And so that has them trading down like 14.5%.
Wowzers! I kind of would have expected the manufacturing-based industries like the metals industries to, at the very least, have some optimistic guidance. We got to replace all the missiles we're throwing around.
Yeah, I'm not getting any though. I mean, at least not looking at any anyway.
Yeah, I'm surprised.
So yeah, it's been it's a tough road right now with oil prices and energy prices. It's not just hurting businesses; it's hurting folks at home too. And so it's a big deal. We'd really like to get that crude oil back under 90. I mean, and it pains me to say that, Dave.
It obviously helps the market what it is. Yesterday we had another green day, resetting the table here. Everything was pretty well up on the major indexes. I'm kind of getting a hint that 45 minutes before we open, we're not looking at the same thing. How are we doing today?
We're not, Dave. It's a lot of red ink again today. Dow's down almost 0.7%. The S&P 500 is down almost 0.8%, and the Nasdaq 100 is down almost 1%. The Russell 2000 is down a little over 1% right now. So good, solid red colors. Silver and gold, same thing. Silver's getting killed again this morning, down 6.1%, back below 70 at $68.16 an ounce. Gold down 2.5 to $4,467 an ounce. Crude oil up 4.25 to $94.33 a barrel.
That $90 number really does seem to do a number on the markets, because overseas it looks like about the same thing. They are more sensitive to the imported oil through the Strait of Hormuz, obviously, and the Asian Rim markets are all down. Mainland Chinese markets down about 1.25% on average at the 6 a.m. close. No better over in Europe. Everybody is red. I got some resoundingly red numbers, like the German markets down by more than 1.5% on average. About 1.25% halfway through the European day to the negative side, and there ain't no green nowhere in Europe either. I'm not optimistic either today. I just want to get optimistic about my retirement. Philip, how do I find you to get my retirement plans on track?
Dave, it's times like these that it makes it even more important that folks have an actual plan, a written game plan for their income. And that's what our core retirement design really does, is creates that income plan for them. Give us a call at 863-382-0037 to schedule your 30-minute phone call. I'd love to talk to you, see how you're doing, if you're on the right path, maybe a few things we can tweak here and there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And newstalk730am.com on the stream. My friend, you have a good day. Let's cross our fingers something turns to the green side, and we'll talk tomorrow, all right?
All right, buddy. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, thank you for joining us today. I look forward to speaking to you again soon. Next Tuesday, as a matter of fact. Join us then. Love to see you. Take care. Until then, bye now.